Hey everyone, welcome back to Corporate Decoder, the place where we take apart complex corporate filings to find the juicy bits. Today we are diving deep into Blackrock Fund's latest SE filing, and let me tell you, it's a wild ride through the world of investments. So this is a semi-annual shareholder report, which is basically a checkup on how these funds are doing. We've got a whole bunch of them listed here, but the core story is about their performance and what they're invested in. Think of it as a financial checkup where we get to see the nitty-gritty. Alright, before we get into the weeds, why don't you hit that subscribe button and join our Corporate Decoder community on Discord. We break down these filings every week, so you don't have to. Now for the main event, the financials, Blackrock is a giant in the investment world, and this report covers several of their funds. For example, the Blackrock Advantage International Fund. It is packed with information. This report is for the period of June 2025 to November 2025. Let's look at what these funds cost you. For a hypothetical $10,000 investment in the institutional shares of the Blackrock Advantage International Fund, your costs for the last 6 months were a mere $26. That is a tiny 0.50% annualized cost. Pretty cheap, right? When we talk about fund costs, it's like the fee you pay to have someone manage your money. These numbers tell us how much of your investment goes towards management and other operating expenses. And for these institutional shares, it is a very small slice of the pie. Looking at the key stats for the Blackrock Advantage International Fund, the net assets are a massive $6,558,698,320. That's over $6.5 billion. They hold 410 different investments, and their portfolio turnover rate, which is how often they buy and sell investments, is 60%. A moderate turnover rate, not too high, not too low. Now, let's talk about where the money is actually invested. The geographic allocation tells us which countries these funds are putting their money into. Japan leads the pack at 24%. Then comes the United Kingdom at 14.7%. France follows at 11.4%. And Germany at 10.4%. The United States makes up only 4.4% of their investments, which is interesting given its size as a market. It seems like this fund is really focused on international markets. When we look at the 10 largest holdings, it's dominated by tech companies. ASML Holding NV is their top holding at 2.8%. SAPSI is next at 2%. And then Sony Group Corp and Hitachi Ltd both at 1.6%. It is a very tech-heavy global portfolio. This suggests a strategy focused on growth, particularly in the technology sector across different countries. Now let's quickly check out a few other funds to see if the story is similar. For the Blackrock Advantage Large Cap Growth Fund, institutional shares cost about $35 for a $10,000 investment, which is 0.62% annualized. They have over $1.6 billion in net assets and hold 140 investments with a portfolio turnover rate of 53%. And what are they investing in? Get this. Information technology is a whopping 51% of their net assets. Communication services is next at 13.7% and consumer discretionary at 11.5%. This confirms a strong focus on growth and technology, very similar to the International Fund, but concentrated in the US market. Looking at their top holdings, it's no surprise. Nvidia Corp makes up 9% of the portfolio. Microsoft Corp is at 8.4%, and Apple Inc. at 7.6%. This is a concentrated bet on the biggest tech names in the market. A classic growth strategy. Let's quickly look at the Blackrock Advantage Small Cap Core Fund. Institutional shares here cost $28 for $10,000 or 0.50% annualized. They manage a significant $4.4 billion in assets, hold 805 investments, and have a portfolio turnover rate of 48%. Their investments are more diversified across sectors compared to the Large Cap Growth Fund. Healthcare is the largest at 19.6%. Industrials follow at 17%, and financials at 16.8%. This fund seems to be targeting a broader range of industries within the small cap space. In terms of holdings, it is a mix of smaller companies. Credo Technology Group Holding Limited is their top holding at 1.0%. This shows us a strategy that's not putting all its eggs in a few tech stocks, but looking for growth across various sectors in smaller companies. Now, if we look at something like the Blackrock Energy Opportunities Fund, the story is very different. Their institutional shares cost $49 for $10,000 or 0.92% annualized. For a specialized fund like this, these costs are pretty standard. They manage about $270 million, hold just 33 investments, and have a low portfolio turnover rate of 10%. The low turnover suggests a buy and hold strategy. which is common in more focused sectors like energy, where you might be betting on long-term trends. And what is that energy opportunity? It is overwhelmingly concentrated in oil, gas, and consumable fuels, making up 94% of their net assets. Energy equipment and services is a distant second at 2.8%. This is a very focused strategy, essentially a bet on the energy market. Looking at their top holdings, it is dominated by the oil giants. ExxonMobil is their top holding at nearly 20%, and Shell plc is second at over 10%. This clearly shows a strategy focused on the major players in the energy sector. It's a straightforward bet on energy prices and the companies that produce them. Interestingly, if you look at the financial tables within the reports, you can see this pattern repeated across many of the Blackrock funds. They often have a short term securities line item, which is basically cash or cash equivalents sitting in money market funds managed by Blackrock itself or its affiliates. For example, the Blackrock Advantage International Fund has 1.1% in short-term securities, and a good chunk of that is in Blackrock cash funds. This is a common practice for large asset managers to keep cash within their own family of funds. What is really interesting though is when we look at item 6, the schedule of investments, it gives you a detailed breakdown of every single holding. For the Advantage International Fund, we see holdings spread across various countries. Australia alone accounts for 6.6%. They hold BHP Group Limited with a value of over $38 million. And then it lists companies across Japan, France, Germany, and the UK, with companies like ASML holding NV, SAP, SAE, and Sony Group Corp appearing in the top 10. This confirms that strategy of global diversification with a tech tilt. If we then jump over to the Blackrock Advantage Large Cap Growth Fund, the breakdown is very different. Here, information technology is over 50% of the net assets, and their top holding, Nevada Edia Corp, makes up 9% of the fund's assets. This level of concentration in a few large growth stocks is a key part of their strategy. It's a bet that these big tech names will continue to drive growth, but it also means the fund's performance is heavily tied to the fortunes of these specific companies. And what about the risks? The filing dedicates quite a bit of text to explaining them, which is always a good sign. They discuss valuation risk, counterparty credit risk, and geographic or asset class risk. The fair value hierarchy section is particularly helpful. It tells you how they value investments that don't have a ready market price like private company stock. Level 1 investments are the easiest to value using observable prices in active markets. P-level 3 inputs that are unobservable and significant to the entire fair value measurement for the asset or liability, foodie P-level 3 investments, are the trickiest, relying on estimated values where market prices aren't readily available. This means BlackRock's own judgment, or that of a third party, plays a big role in valuing these investments, and that can be a bit less predictable. So what is the takeaway here? BlackRock's funds are highly diversified in some areas, but very concentrated in others, especially in their large cap growth and technology funds. They are making a strong bet on the continued growth of major tech companies and maintaining a global outlook for their international fund. The energy fund, as expected, is a pure play on the energy sector. The financial health and performance seems solid across the board. But as always with investing, there are risks involved, especially with those level 3 valuations. Overall, BlackRock seems to be executing its stated strategies, providing a range of options for investors depending on their risk tolerance and market outlook. They are clearly leveraging their size and expertise to manage these massive portfolios. Alright, that's our breakdown of this BlackRock filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.